Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. Today is Friday, it's the 12th of May. My email address rshaw@fxcm.com. If you need to contact me, just send an email through to that email address. I've turned the camera off. I'm actually in the office. The sun's right behind me, so I'm going to just keep the camera off for today. Find a better position from next week. But in the meantime, I'm just going to bring up our disclaimers. I'll bring up the high risk investment warning first. All right, and here's the commentaries disclaimer. I'm going to just keep that on screen for a few moments as well. And here is our references. It's market scope and trading view. Let's go through the market scope first. And I want to just keep an eye on the S&P, the Dow Jones, with regards to how the US banks are still exerting a pressure on the broader market indices. So you can see this is the US banks FXCM basket. We have been at the support level for quite some time, and the fact of the matter is that as long as the banks are subdued, there is going to be a pressure on the markets. What we can do here, let's just add a 30-week moving average, which is the moving average that Stan Weinstein tends to use. So we'll just put in EMA 30-week. I'll make it a little bit thicker. And really, you can see that we are potentially at an accumulation here, potentially at accumulation. And the idea is we want to move into a mark-up phase. The mark-up phase would be above the 30-week moving average, and that 30-week moving average effectively pushing upwards, getting it using that as the filter. Take a look at the RSI. The RSI is on the bearish side of 50. Now, there's some interesting implications here. If we just go through to this tab here, what I want to do is put the S&P 500 underneath this, just to show you the effect that the pressure on the banks is having on the S&P 500. So we're just going to press this price overlay key here, and we'll bring up the SPX, and we're going to display it on a separate chart below. Okay, and you can see the pressure is exerted here. Okay. And the pressure is exerted. So you want an arrow here. The pressure is exerted here. And whilst there has been some sort of movement up here in the S&P, the fact of the matter is that because we haven't got a recovery on this leg of the US banks basket, we don't have a higher peak over here. So let's just put in the peaks and troughs just to show you what I think is happening here. If we go all the way back to October last year, and what we can do is we can put in over here trough. So this would be our reference trough. Okay, this would be the reference peak. Okay, take a look at the US stock banks as well. Let's put in our trough over here. Okay, let's put in our peak over here. So far we've got our beginning peaks and troughs in the references. Now, what you can do is you can see on the S&P 500, what I'll do is just add I'll add a watermark here so you can see the instrument more clearly. Okay, so we got the S&P at the bottom. Now what I want to do is I want to just add the higher trough here. I'm just going to put in HT, right? Let's put in HT. Okay. Here we've got HP, higher peak. So at this stage of the game, the S&P is in an uptrend. Guess what's happening to the US banks? Higher peak. Okay. Then what happens is there is this regional banking. Well, it's not the regional banking. It's first Signature Bank and Silicon Valley Bank go out of business effectively in March. That causes this big sell down in the US banks. We get a lower trough. Okay. Here we get a high, still a higher trough. Here we get a lower peak. And here we get the lower peak. In other words, the pressure from the bank side is having an effect. We're getting a sideways type of pattern over here as opposed to an uptrend. Now, what I think is worth our time looking at as well is the regional banks ETF that we can find on TradingView, and that is the ticker is KRE. KRE. This is the regional banking ETF. Okay, so you can see that the regional banks have taken over in terms of the crisis, and they're showing really no recovery at the moment. They're getting pushed all the way down. What's interesting to me though is I've added an RSI onto the regional banks, and the regional banks look as if they are oversold. Okay, so I think the pain here is potentially at its nadir, it's potentially at its end. Now, that's interesting because I think if the regional banks can find some sort of support here, then that filters through to the general US banking basket, which is made up of larger banks, and that in effect goes through and supports S&P 500, and maybe we get a break out to the upside here, maybe. Now, what's interesting, okay, let's go back to TradingView. I want to show you guys something that's very, very interesting. Okay. Let's put in the NASDAQ. We'll use the FXCM NASDAQ. Okay, let's put the 2-year yield underneath that. I'll explain to you why I'm putting the 2-year yield underneath that in a moment. Okay, let's put in the US banks basket underneath that, and then let's have a discussion. If you guys recall how the market, the intermarket relationship worked back in March, is you had the US banks having a confidence crisis. What subsequently happened is that the yield in the 2-year shut down. In other words, the market started looking at the fact that the regional bank crisis is going to usher in perhaps a recession towards the end of the year. In fact, the minutes of the Fed minutes for March had a presentation by some staff members that said there will be a recession at the end of the year. Interest rates push down, okay? at the same time as the banks move down as well, the confidence crisis. What happens to the NASDAQ? What happens to the NASDAQ here? The NASDAQ actually gets supported. In other words, there is a feeling here that the growth side of the market, perhaps benefiting from the fact that the banking crisis now has pushed the yields down. That makes sense. Growth companies will benefit. They're more sensitive to interest rate movements. The interest rate movements that have been pushed down here, reflecting NASDAQ. We've been watching NASDAQ for quite some time, and you can see how the timeline here is uncanny. It's uncanny. Just as the banking crisis starts to unfold, just as the two-year yields start to respond, so does the NASDAQ. Now, it's not the only reason that I think the NASDAQ is being driven higher. I think there are other reasons. Number one, the tech earnings weren't bad at all. There were, I think Netflix came out with perhaps a little bit, there's a bit of pressure there, but by and large, there's been cost cutting and the earnings have been pretty good in the tech sector. Plus, and this is a big plus, there's been share buybacks, stock repurchases. Now, what that tends to signal to the market when the management of these companies decide that they're going to repurchase shares, it's a signal that they think their shares are undervalued. Okay, so you can see that the NASDAQ here is going to react from the fact that we're getting a push down in yield, which is because of the US stock banks, or a response to US stock banks, which is now very much, we've got to watch that regional bank ETF. Does that regional bank ETF start bouncing? If it starts bouncing, how does the NASDAQ react off of that? We're going to have to just be very savvy about that. And secondly, the share buybacks, I think, are doing their job here in supporting the market. Take a look at this. Let's get rid of US 2-year yield. Let's get rid of banks. Let's do a relative strength analysis here. We'll do a relative strength to the S&P and we'll do a relative strength to the Dow Jones. Watch this. So let's go first. We'll use the FXCM instrument. Let's do it first to the SPX 500. Okay, now take a look here. Let's put in some peaks and troughs. Okay, this is now a relative strength. It's showing the performance of the NASDAQ relative to the S&P 500. Put in our reference trough. Put in our reference peak. Okay, once we've got references, you can see how the NASDAQ is outperforming here. Higher trough, higher peak. Okay, let's take a look at this. Let's take a look at this in terms of the relative strength between NASDAQ and the Dow Jones. So we'll go NASDAQ 100 divided by, we'll use the FXCM instrument, that's the US 30. Look at the peaks and troughs here. Got a reference trough, reference peak, here's the higher trough, here's the higher peak. Okay, so it's looking very, very interesting indeed. Just to end off, let's do a top-down analysis of the NASDAQ 100. So let's go through to market scope. Let's bring up here NASDAQ 100. And what we're going to do is we're going to do a top-down analysis. Just starting with the weekly here. What we can do is we can take up the moving average. I want to show you guys, we've got a very interesting chart action here. We've got higher trough, higher peak. Okay, the first higher trough, first higher peak, that's defined, the momentum of that trend is defined by the green trend line. Then we've got a second higher trough, second higher peak. That momentum is defined by the orange trend line. The momentum of the Nasdaq has jumped. It's jumped from the gradient of the green trend line to the gradient of the orange trend line. You can see that the RSI is moving along nicely between 50 and 80. Go through to the daily chart zone analysis. Take a look. It's really sitting nicely in zone 1. That's between the upper blue, upper red. What else do you see here? Take a look at the Bollinger Bands. How the Bollinger Bands are starting to move in opposite directions. The upper Bollinger is starting to move up. The lower Bollinger is starting to move down. In other words, we've got the Nasdaq weekly showing an expansion of volatility. Where's the candlesticks trading? They're trading in zone 1. So we get an expansion of volatility right in a sweet spot, so to speak. Is this going to help us in terms of trading? Let's go down to the hourly. Okay, so what we want to do here is probably wait for some sort of pullback, just to see if we get a push up of the central pivot, or if we get a push up from the S1. Remember, what tends to happen is that markets don't move in a straight line. Markets will zig and they will zag. And what we've got is the primary trend. The primary trend moves up. The intermediate trends show this ebb and flow, ebb and flow. What we want to do is we want to try to get some pullbacks. And if the pullbacks cooperate with us, then we're getting a lower risk area. So perhaps we can see if there's a pullback here because the signal was given yesterday. The signal was given yesterday. If we don't get the pullbacks, and if the stochastic hangs out in the upper quintile, if it hangs out above 80, okay, then the swing's still on. So Nasdaq's looking very, very interesting. It's looking very, very interesting. It's one that I would certainly keep on my watch list, and I think that we can see if there's the pullback, and then we shall do further analysis on it next week. All right. If there is any questions, please go ahead and type those in. Any questions? Go ahead and type those in. I'll just turn on the camera just to show the sun seems to have moved over the last sort of 20 minutes. All right. I don't see any questions coming in. So I think what we'll do is we will conclude at this point. I want to wish you guys a good day, a good weekend ahead, and we shall pick it up again on Monday morning. Thank you very much, guys, and speak to you then. Have a great weekend.